You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
Can you give us just some examples of what type of investments that people could maybe one short term and a medium term and a long term, just to give people an idea?
Absolutely. That's a great and fair question. So one of the things that I love to make sure a portfolio possesses, even in the long-term stuff, is diversification. And I know most of the people probably listening to this podcast are real estate lovers and may even have 1 or 2 or 5 or 10 real estate properties in their portfolio. So one of the things I do like to talk about is diversification. Again, God forbid, what happens if something horrible happened to the real estate industry? You don't want all your eggs in one basket. So one of the products that I like to diversify with is called OKR. It stands for Old Kent Road. It doesn't really mean anything, but it's simply an entrepreneur who partners, believe it or not, with the Canadian government. And the Canadian government gives out entrepreneurs who are striving for inventions and have a great idea. And they just need money to get these inventions to fruition. So the government actually, if you qualify for these type of credits, will actually give you specific money to cover specific things that you are inventing. All right, like all the materials that you're inventing. Or if a good example is BlackBerry. Everybody remembers BlackBerry. BlackBerry was a SR&ED recipient. All right, and again, without getting into too many details, obviously, when you're dealing with the government, things take a long time to get your money back. So these poor SR&ED companies, if they're small and they were taking money out of their own pocket, they would have to apply to the SR&ED government to get the credits back. But that could take 6 months to get your money back from the government. So now you've been out of pocket, let's just say, for a year and a half. It's very difficult to survive. So what this company, OKR, does is bridge between the Canadian government and the small company that has this new innovation. And the company that has new innovation signs over the SR&ED credit to OKR. OKR will lend up to 60% of the money that is owed to them by the SR&ED company. And so, $100,000. The SR&ED is handed over to OKR. OKR hands them $60,000, and then 90 days later, the government pays OKR for that SR&ED, and then OKR gives the rest of the money, whatever is due, back to that company. And basically, they make money on charging high interest. And I remember, it may sound high, like 24% a year, but the company are only borrowing it for a very short period of time. So that's one of sort of diversification companies. Listen, I'm probably not doing it justice when I sort of skim over the top of the company like that. There's much more to know about the company and the brilliant founders. But if I'm just giving you an example of a diversification away from real estate.
So would you call that like a short term or a medium term?
Well, so they have 2 funds. One is a 6-month minimum. So you put your money in there for 6 months or more, and you can earn around 9% on your funds. And then there's a long-term hold, that's a 5-year hold, that you can earn up to about 12% on your money. All right. And that's paid quarterly, and they've been around for many years, never missed a payment. The fund is now worth approximately $60 million. So they've really got their wheels turning, and they're doing extremely well. As a matter of fact, because a lot of people are wondering, what about COVID? Isn't COVID affecting these companies? The Canadian government actually increased the amount of SR&ED credits that they're handing out to these entrepreneur companies because they don't want them to stop. So they're actually throwing out wider net, throwing out more money during COVID. So that's an example of a short term and a long term, because they have the 2 funds. But it does show excellent diversification. Another excellent diversification, again, I won't go into the particulars, but we're supporting a cannabis fund A gentleman has incredible connections in the cannabis field, and it's not just growing or smoking or recreational. He owns part of a company that produces special seeds, for instance, or another company that is a retailer, and he does own a couple of grow ops and this kind of stuff. And the general premise is these are starter up companies, small to medium companies that are going to get IPO'd. So they're going for the initial public offering to get on the stock market. And if anybody knows IPOs, typically when a company comes out at $1, it's usually goes up to $2.50, $3. And he gets warrants to buy at whatever price it is selling at, but he gets warrants to buy at 75 cents as an example. So again, another excellent diversification company. And he's been doing this for over 3 years now, better than double-digit returns. It's just incredible the returns that he's having with the cannabis industry.
And some of you, sorry, go ahead. Go ahead.
I was just going to say, and then the third one, we have real estate. So there's either low-rise, like 3-story apartment buildings that the one fund is buying. Another fund is buying high-rise Class A buildings. Another fund is buying industrial buildings, and a fourth fund is buying commercial properties. So there's a huge diversification in and around the real estate business.
I remember what wasn't that long ago. What is it? 2, 3, 4 years ago, you were talking about was it storage facilities in downtown Vancouver, and
Yes.
Car washes.
Yeah, I mean, there's all kinds of stuff, isn't there?
Yes, there is. And I wish I could talk about the car wash self-storages, which, by the way, they on paper doubled in value. So anybody who invested is doing extremely well there. They have done, or in the middle of doing 4. 2 are open and operating. 1 is under construction, and the 4th one they just finished funding. So hopefully they can find a 5th property and continue to raise, but that fund is closed for now.
Well, so you lose, right?
Well, let's plant these seeds and let's get people to understand and ready to invest, because when opportunities like that do come up, they're fairly short-lived. Yes.
Yeah. Okay.
Steve, there was in a conversation one time at the REITE Club, I overheard you say to somebody that they should be thinking about a pension-style portfolio. And then the break was over, and I could never ask you what that is. What is it? All
right. That's the basis that we are building people's portfolio. Let me give you a little bit of history. So 20 years ago, or let's take the best pension plan that I've ever seen in my life, which is Ontario Teachers Pension Plan. They have incredible pension. And so 20 years ago, if you looked at their entire portfolio, approximately 3% was in something called private equity, or these alternative investments, and 97% were out in the stock market. But the problem was that the stock market fluctuates so much, and that pension needs stability, because that pension needs to produce monthly money to pay the teachers' pensions, to pay the teachers of retired teachers' pensions. So they found that when the stock market's up, woohoo, they're doing phenomenal. But when the stock market was down and they needed some cash and they had to sell, they were selling underwater. That's not a good thing. So they were trying to stabilize their portfolio. And what they found was when they invest into real estate, and again, a lot of times teachers' pension plan doesn't actually physically go out and buy a building. They buy with partners. They buy with an entrepreneur that has a building, maybe needs some cash or needs the mortgage. And that's the teacher's pension plan, that's the money half. So now let's say they're 50-50 partners or whatever the case may be, but that is a alternative investment. So the teachers found, investing into real estate or shred credits or the cannabis industry, whatever, when you do it properly, the profits grow. There's no downfall. There's no downstroke to that. So today, as an example, Teachers Pension Plan has about 55% of their billions of dollars portfolio is in private equity space. And so this has really stabilized their income. And in I think it was 2019, they returned 18% on their billions of dollar portfolio, 18% return.
Wow.
You know,
That's
and so when you extrapolate that thought, and when you say, well, I want my portfolio to look like that as well, here's where I come in, because I know that people listening to this are excellent and entrepreneurs, understand out of the box thinking, and probably have a piece of real estate, 2 or 3. Right. And no doubt they have cash, no doubt they've got all that taken care of. But what they need is diversification. And that's where I come in, and I can add to that private equity space and diversify them away perhaps from real estate, or keep them into real estate or whatever. But this portfolio that we're striving to create mimics that teacher's pension plan that is powerful, that's stable, and that's built on solid foundation. That's how we should have everybody's portfolio that's listening to this.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.